Can I use my Roth IRA to buy stocks? If you take a rollover, you have 60 days to redeposit the fund into another IRS-approved plan. The custodial company must be approved by the IRS as well. If you miss the 60-day deadline, you may be able to get an exception and still retain your tax-free status, but you must have proof that you tried to meet the deadline. If you miss the deadline and can't get an exception, the entire account value must be reported on your year-end tax returns. Roth accounts are handled differently since contributions are taxed as regular income for the year they are made. Only earnings within the account would be subject to taxes if you miss the 60-day deadline. Mutual funds are stocks offered by custodial companies that are also stockbrokers. Historically, average returns are less than 8%, but because of the volatile nature of the stock market, you can't really count on it. Roth: if you convert from a traditional to a Roth, the entire account value is subject to taxation as regular income for that year. There are maximum earning levels for those that want to convert to a Roth. Instead of taking a rollover, you can always transfer the fund from one approved custodian to another. Transfers are not reported to the IRS and do not jeopardize the tax status of the account. You can still invest in publicly traded stocks, but you can also invest in real estate, an increasingly popular option. The real estate market is affected by the economy, but it is not as volatile as the stock market. If you make good choices, it is possible to earn 30% per year or more in the housing market. If you were asking what type of account can my rollover IRA be put into, hopefully you have the answers that you needed and something more to think about real estate. Well, that's all for today, people. If you have a minute or two to spare, please check out my website,